Welcome back to Rockstock Channel. It is Tuesday, July 22nd, and we're back with a special announcement. A good friend and regular guest of ours, Matt Fernley, is joining Rodney Hooper and me as a partner at our advisory firm, RK Equity. Rodney and I have known Matt for over 5 years and have admired the analysis he's published through his monthly Battery Materials Review and Recharge podcast, his frequent musings on LinkedIn and X, and on panels at various conferences we all attend at Fast Markets, Benchmark Minerals, and 121. Matt will complement RK Equity's lithium coverage, for which he made a timely call in our interview 3 weeks ago that lithium prices in certain stocks like Sigma Lithium and Lithium Argentina had reached oversold levels and looked opportune to buy. But as importantly, Matt will help us diversify further into many other critical minerals he's been studying and writing about for over 25 years, and we'll discuss them, quite a bit of them, in today's interview. We live in a world of great disruption and volatility in both technology and great power geopolitics, which are providing a huge tailwind and demand shock for minerals extracted and processed from the Earth's land and sea. Some of these, like lithium, are small markets poised for exponential growth. Others are larger established commodity markets, but still require precision, additive manufacturing for high-tech applications. As an investment thematic, commodity equities remain an incredibly under-owned sector where valuations are comparatively low and cost of capital is very high. The sector is highly volatile and highly speculative. It is also fairly technical. It's hard to find reliable, credible, easy to understand information. Rodney and I and Matt have done and will continue to do our best identifying interesting producing and development equities within and outside lithium, and as always, with a primary focus where possible on ex-China supply for ex-China demand. Outside lithium, we have been fortunate over the past 2 years to have identified North American successes in titanium processing, Hyperion X, and cesium in power metals, and seafloor mining, the metals company. And we continue to support our one conventional nickel pick, Talon Metals in Minnesota and Michigan, and a natural graphite anode play, Nouveau Monde in Quebec. Like Rodney and myself, Matt experienced the China-led supercycle at the start of this century, in which generalist retail and institutional investors participated in that unprecedented fixed asset investment event. We see parallels today as the energy transition thematic continues in most countries throughout the world and has been augmented by even bigger dynamics for the critical minerals-intensive thematics of artificial intelligence, humanoid robots, and defense technologies. In the age of electricity, where energy dominance is key, the world has awakened to the fact that it is too risky to simply outsource the production of critical inputs for established and future technologies to China and China-backed entities in emerging market countries. It is imperative to diversify and reshore critical minerals mining and processing for supply chain management, environmental, and many other reasons. Through fits and starts, the first Trump administration, then Biden, and now under Trump 2, a mine baby mine and process baby process mentality has taken root. Equities tied to gold, uranium, copper, rare earths are experiencing significant inflows. Once loved, recently hated lithium is experiencing a short covering rally. Matt, Rodney, and I believe a new supercycle like the one we experienced at the beginning of this century is underway and is just getting started. And we look forward to expanding our coverage to many new, exciting opportunities. Please note that nothing in this video is investment advice, and please do your own research and read the disclaimer at the end of this video. And if you like the video, please like it, comment on it, and subscribe and click the notification bell so you can be notified of all videos once they're published. And if you have any ideas for commodities or stocks you'd like us to cover, please email us at rockstockchannel@rkequity.com and register your email at rkequity.com if you'd like to receive our monthly Lithium Ion Bull newsletter. You could follow Matt Fernley on LinkedIn and also on X, Matt_Fernley. And with that, welcome back, Matt, to Rockstock Channel, and more importantly, welcome officially to joining RK Equity.
Thanks very much, Howard. Appreciate it. Looking forward to the opportunity.
So a number of viewers that may have seen you before, but just before we start, remind us what you've been doing, for these 25 years or 30 years in the market.
Yeah, well, I don't have very many gray hairs, but that's made up for the fact I don't have many hairs at all. But yeah, I mean, I started my career as a geologist, as a geochemist, but I went into banking very early on in my career for shame, and because I always wanted an honest job, but I never ended up with one. I've been 25 years now in equity research. Started off in 2000 at UBS covering the paper sector, moved into global basic materials and mining strategy. We did a lot of the early work on modeling Chinese demand for the materials that would go into the fixed asset investment event. And then as a strategist, it was my job to read through all of the work that the individual bottom-up analysts were doing at UBS and to select some of the more interesting stock opportunities to push out to our clients at that point. Left UBS in 2006, spent a couple of years in hedge funds. Then I went on to GMP Securities Europe, where I was a mining analyst covering West African, European, basically ex America stocks, always in the sort of industrial materials space. So base metals, iron ore, titanium minerals, mineral sands, basically not precious metals, which I've never really been able to get my head around in terms of forecasting cycles. I was also doing a lot of work there on basically China and following on from my work at UBS, Chinese basic materials strategy and mining strategy. A couple of years out of the industry, and then I came in back in 2016, 2017 with a Chinese entity called Haitong. That didn't last, and I came to set up Battery Materials Review in 2018 because I was doing a lot of work in Haitong about on Belt and Road and the reinvention of Chinese industry in this new area called electric vehicles. And of course, there'd been a couple of false starts in electric vehicles in sort of 2012 and 2014, but very much was of the opinion in 2016, 2017 that it was really happening this time. So I basically set up Battery Materials Review to focus on the upstream raw materials sector, and I've been doing that for 6 years. And then alongside that, for the last 5 years, I've also been head of research for Westbet Capital's Voltaire Energy Transition Fund. And that involved looking not just at the raw materials, but also the midstream and downstream of the energy transition and the users of materials and equipment to the energy transition. So that was a fascinating role. And it was sort of poacher turned gamekeeper. So, yeah, and then left Westbeck earlier on this year. And here I am working with you guys.
Oh, it's great to have you, Matt. And as I describe it to some other people that we've started to introduce you to, I'm not an analyst, but I play one on YouTube. I'm more kind of in equity capital markets, research sales. Rodney is a CFA, is an analyst, but never did it in a full sell side research way as you have, Matt. We're going to flash up here this UBS primer you did on mining. I don't know when that was in 2002, but we're all of a similar age and experienced, that super cycle. That's how I cut my teeth originally. Rodney has been a prop trader, derivatives, fund manager, and the like. So I think overall, um, we have highly complementary skills. But Rodney and I, started together, I don't know, 6 or 7 years ago. We had both done a deep dive into lithium specifically. As Rodney said, we did the 10,000 hours using the outliers, a Malcolm Gladwell analogy, but haven't gone as deep into rare earths or many of the other commodities that you've been studying, for a long time, Matt. So we saw great complementarity, and thrilled that you're now, here with us, and we're going to spend the rest of this time, kind of talking about um, some of your other coverage areas, and in particular, the ones that you're most keen on, at the moment, recognizing that. Um, this is not the exclusive area where we're going to focus on, because you have immense flexibility, I guess, outside of the precious metals that you mentioned.
Sure. I can see Rodney's dying to ask me a question. Rodney came on my podcast as my guest. I'm expecting to ask him questions.
Yeah, well, now you're effectively in the fold, so it's kind of like the same spot. I mean, I guess what I'm wondering, Mac, given you've had a chance to look across the sectors, is I mean, the opportunity in lithium for us was it is abundant, but it hadn't been used really in meaningful volume. So there've been discoveries. The question now is we've had a shift away from, I mean, copper's been consistent in terms of its demand and need, but we're now seeing rare earths, minerals, and other things that are suddenly now coming right to the forefront. So, in your mind, are there any sort of easy wins or opportunities for specific metals that haven't been in the spotlight in the past and now are having their day, and new decent discoveries and great returns possible?
Yeah, I mean, I think that there are quite a lot of metals that fit into that category. I think thinking about this event, this potential super cycle event, is that the previous super cycle that we all cut our teeth on in the early noughties was based on fixed asset investments, and it was very much bog standard materials: steel, aluminium, copper, zinc. Things that we use every day. Whereas this super cycle is based on technology innovation. And that's not necessarily just around renewables and batteries. It's around other areas as well, particularly things like semiconductors, and areas like that. So what we're seeing now is new materials starting to dominate. And I mean, don't get me wrong, there's always been, for instance, a rare earth industry. There's been a rare earth industry since the 80s and 90s, but utilizing different rare earths. So early in the 80s and 90s, the rare earths we were interested in were things like lanthanum and cerium. We don't give two hoots about lanthanum and cerium these days. We're focused on the magnet rare earths like neodymium, praseodymium, and terbium and dysprosium. And, the defense application rare earths, so the heavy rare earths as well. So, there are areas like that, in semiconductors, gallium nitride semiconductors. Gallium is a core area, germanium, again, in the semiconductor space. In solar, a lot of people know silver, and I always said, I wouldn't do precious metals. Well, silver is a core component of solar panels, and based on my forecast, I actually think most analysts are underestimating how much solar panel demand there will be over the next 10 to 15 years. So these components of solar panels, like silver, which is seen as a precious metal, but actually is a strong industrial metal, potentially have really significant growth profiles. Things like antimony, which I think probably most people haven't heard of as a metal. But this is a core component of solar panels and potentially new technologies as well. So there's lots of materials out there that perhaps are not household names, shall we say, that could turn into household names over the next 5 to 10 years. And that's the attraction of this space. And the attraction of a platform like RK Equity is the ability to educate investors and bring investors into new opportunities that perhaps they wouldn't have actually looked at before. So yeah, there's those areas, those new metals, and then obviously there's opportunities in metals that, for instance, have been dogs for 20 years. So, for instance, aluminium. I mean, if you mentioned aluminium to anybody in the space over the last 10 or 15 years, they would be going, "Oh God, it's horrific." It's been in a 20-year bear market, but now I'm suggesting, well, it might be the time to buy aluminium, and it might be the time to buy raw materials of aluminium. I think that there's very interesting new materials coming to the fore, but there's also old materials that are being really unloved that have new potential going forward.
Yeah, I mean, I guess my question is, and by the way, I definitely won't be on the under on solar panel forecasts, as you know, because I'm as bullish, if not more bullish than you. If you look at the historic charts, the actual versus expected has been
Oh, it's
exceeding it every year, and they still keep
it's
under
It's
forecasting.
crazy. I mean, when I went in, I mean, I think the CAGR for solar panels installations over the last 10 years has been something like 15%. Over the last 5 years, it's been 30%, yet most analysts have sub 10% year-on-year forecast for the next 5 years, and you're, like, sitting there going, "You've been wrong so far. What makes you think you're not wrong now? And if you are wrong, what does that mean for materials demand?" And it's quite substantial.
Absolutely, and it's part of the reason why I like silver as well is you competing against the investment thesis and the precious metal thesis and people hoarding it. So yeah, that's a good one. But yeah, I guess the trick is, I mean, we find ourselves where we find ourselves, Matt, in lithium is because it got hot, exploration money poured in, and now we've had lots of discoveries. So now I guess the question is what has been underfunded on the exploration front of these new metals that you're talking about, do you think have a high probability of success? Because copper trades where it trades because the average grade just keeps going down every year. Are there some obvious winners where you think there are decent deposits out there in any of those, which should be relatively easy to find?
I mean, I think that there are opportunities in all of the commodities, all the metals I just mentioned. And I think the other thing that we've also got to be aware of is obviously the West is seeking to alter its supply chains. So, I mean, a lot of the existing supply chains, they run through China. So, for instance, in a lot of the minor metals like antimony, like germanium, like gallium, the supply chains run through China. So, if the West genuinely does want to set up its own ex-China supply chains, then we have to generate, additional resources of these metals, but also an area that we have historically been really bad at is processing. So we've got to put in processing resources for these, and that's particularly prevalent in, for instance, the rare earth space and the graphite space, where 90, 95 to 99% of the industry still flows through China. So it's all very well saying, well, we've got X graphite resources and X rare earth resources, even though we don't have X rare earth resources at the moment, but we still don't have the processing capacity, and it can easily take 4 or 5 years to build processing capacity and to get it working to specs. So that's where the opportunity arises in a lot of these materials as well.
You've shared with me and will share publicly soon, some of your writings on certain metals.
Babblings,
Uh, what's that?
babblings.
Oh, I wouldn't call them babblings, but they're kind of like blog posts. And one was on kind of rare earths and how you think about the rare earth market, where you see value. But why don't you talk a little bit about rare earths, and then dig into a few of the other high profile ones where you think there's most opportunity now.
Yeah, so I think the rare earths market is one of these areas which is very poorly understood by the wider market. Um, I think that if we look at the rare earths, a lot of people value companies according to total rare earth oxide, so the amount of rare earth minerals in those deposits. Now, my view is that if you look at the magnet metals, which are neodymium, praseodymium, dysprosium, and terbium, they represent probably 95+% of the economics of those deposits. So there's no point in valuing on TREO, which is total rare earth oxides, when you should be valuing on the economic valuation. So I've written a blog which will be published very soon, which highlights how investors can go in and look at the what I call the NdPr equivalent grade, rather than looking at the TREO, because that gives a completely incorrect valuation for a company. So, if you look at some of the companies that come out as cheap on my valuation, there are a lot of ionic absorption clay deposits, particularly in Brazil. Companies like Viridis and companies like I forgot what the other one is.
Brazil rare earths.
Well, but that's hard rock.
Oh,
So companies like Viridis, and then some of the hard rock deposits like Lindian in Africa, and Brazil rare earths look particularly interesting on the NdPr equivalent basis, compared to the TREO basis. So those are the sort of companies, and we're really looking into the rare earth assemblage, which is much, much more important than just a single TREO number, which doesn't really talk about the economics of the project in any way.
okay. When we last had you on, with Steve Levine, the MP news, MP materials news hit the tape, and that was the subject of a deep dive on my part in the last lithium ion bull. So for viewers who may have seen that or may not have seen that, like we've now had more time to digest that deal, but it was obviously very notable that unprecedented in my mind. The Department of Defense is writing a check and backstopping with the price floors, and also getting kind of downstream, into magnets. But I called this, America's, rare earth and magnet monopoly, right? Because the government is going to be buying or backstopping the material or purchase of the material, but also the magnets will, they'll help facilitate or, to other commercial, buyers. And I'm wondering who are those other commercial buyers? Apple kind of came into it. But just from a perspective, like how big is Mountain Pass in the global context, from a rare earths perspective, but also from a, their magnet perspective. And then if you're, is it, it may not be right exactly to call it a monopoly because obviously, China is supplying a lot of the world's supply, but to the extent that if you want to go outside of China, it's a monopoly, right? There's only one place to go, it seems.
Well, there are only two major primary rare earth mines outside China at the moment, which is Mountain Pass and Lynas Corp's Mount Weld mine in Western Australia. Now, the difference between Mountain Pass and Mount Weld is that Mount Weld has recently increased its resource grades in dysprosium and terbium, the heavy rare earths, whereas Linus's Mountain Pass mine doesn't appear to have very much in the way.
MP is Mountain Pass Mine.
Oh, sorry. Yeah. So whereas MP's Mountain Pass mine doesn't appear to have very much in the way of heavy rare earths. So that's going to be, I think, yes, the deal is very positive, and yes, there's a price floor in there, but the US still needs to source the heavy rare earths for magnet manufacture and also for defense applications. So that's sort of a key point there. So not a complete monopoly on rare earths at this stage. But although we are hearing at the exploration stage that there are potentially other sources of heavy rare earths in the US. So whether those come through and whether the DoD does deals for those, we don't know. Probably further exploration is necessary in that space. And then obviously the other point that is very, very important is the downstream investment from the DoD and from MP as well. And there's only three rare earth processors outside China. So that's, Neo Performance, Linus, and now MP. So, it looks like the DoD is making a US champion. So, maybe not a monopoly, but certainly a US champion by allowing the funds for MP to go downstream into processing and then potentially into magnet manufacturing as well.
Okay, I've thanks for that. I've thought about this because we've followed MP and Linus. I've been an investor in both of those companies just as a way to play rare earths over the years and currently. But I've compared to like kind of graphite, which doesn't have any real like U.S. public producers or too many. Maybe there's Syro or some other markets where like I've just compared rare earths like MP and Linus like lithium, right? Like the there are at least two producers, right, who speak to the market every quarter, and then there's a bunch of developers out there. I don't know how big the size of the overall rare earths market is, but I am observing here that MP Materials now has a market cap of $10 billion, and Albemarle has a market cap of $9.4 million. So a major turn of events, rare earths versus lithium. Any thoughts you have on, for lithium focused investors who may be looking at rare earths, what similarities, differences in terms of market drivers, capital markets, opportunities, processing, mining and processing.
I mean, I would say that rare earths demand drivers are um, more extended than lithium's. I think lithium's demand drivers are quite tight. Primarily electric vehicles and energy stationary storage, like batteries. Whereas demand drivers for rare earths are a little bit more broad based than that. Um, you've got obviously high permanent magnets, but permanent magnet applications are much more widespread. So things like air conditioning, things like wind turbines, things like electric vehicles. You've obviously got demand for magnets potentially coming through in drones and in humanoid robots as potentially strong growth drivers. And then you've also got demand for rare earths in things like rangefinders, lasers, and defense applications as well. So I think the demand base in rare earths is a lot more broad based. It's a small market. It's a smaller market than lithium in terms of absolute tonnage, I believe. Certainly at the magnet materials end of the market. And I think it's a market where processing is more important than in lithium. So I mean, in lithium, it's pretty simple processing to go from spodumene concentrate to lithium hydroxide, or from um, you know um, lithium brine to lithium carbonate. Is pretty simple processing, whereas in rare earths, it's a much more complex processing procedure, much lower recoveries in some cases, and many stages as well. So I think the I would say that for me, rare earths is more a chemicals business in the midstream and in the downstream, whereas lithium is still and I know this goes against everything we've been saying for the last few years, but lithium compared to rare earth lithium is more of a commodity business. Although compared
Okay.
to other commodities, it's still a specialty business.
Why it's interesting to hear your comments about how easy it is to produce lithium hydroxide, considering all the challenges Albemarle and Tangxi have had in Western Australia. So, is this a particular incompetence by Western Australians, or or those two companies?
Potentially a particular incompetence by the companies that have tried to develop the Western Australian assets, I think, because obviously we have lots of lithium hydroxide processing capacity in China. POSCO have just built a lithium hydroxide facility in Korea. Seems to have started no problems. So I think it's a Western Australian issue rather than a specific lithium hydroxide issue. I'm afraid.
Hopefully, Tesla will prove that to be correct, and Rio Tinto with their Bécancour facility. Okay. So besides rare earths, what else? You mentioned antimony. You mentioned aluminum and bauxite. I mean, from everything that I've seen, over these years, Russia and China just kind of like crushed that market. What's interesting about that now?
So, I mean, what's interesting about aluminium is in terms of demand drivers, it's a pretty similar demand driver to copper, which is basically infrastructure. So, we're basically talking about the build out of transmission and distribution infrastructure being a major driver of aluminium demand. And as you mentioned, I mean, China and Russia have effectively killed the aluminium market, primarily China, over the past 20 years by overproducing. We've now got to a position where the Chinese are aware that they're actually effectively been exporting power because the primary input into aluminium production is power. And by overproducing, they've basically been contributing to power shortages in China. And they're also aware of the fact that they are utilizing some of their very um, important domestic resources to send material overseas. So, middle of last year, the Chinese actually announced a production a production cap in aluminium, and it looks like the Chinese producers are keeping to that. And if they do keep to that, basically, we have hit the production capacity cap in aluminium in China. And if you take away Chinese growth from the aluminium market, really the only region in the world where we're seeing substantial growth in aluminium capacity is in Indonesia and in the Gulf area. And what's on the drawing board at the moment is not enough to exceed demand growth. So what we're actually seeing over the last sort of 18 months to 2 years has been a very significant drawdown in aluminium inventories on the LME Shanghai COMEX. And aluminium inventory is now less than four days of supply globally, lower in some cases. A lot of that material is Russian material, which is not usable for Western consumers. And we really are looking at a situation where aluminium looks very significantly undervalued as a commodity. And some of these aluminium producers similarly look quite significantly undervalued as stocks. So, and particularly also, upstream into raw materials where you've had China as a big supplier of bauxite. China is a big net importer of bauxite now. So there's a lot of bauxite material falling into China. The Some of the other producers of aluminium have had a lot of difficulty sourcing material from Guinea, particularly the Gulf producers, and they're now going around trying to source material from other sources. So there's a lot of focus on sort of aluminium and aluminium raw materials, and it always gives me a bit of a giggle when I see, the prices every day, the commodity prices every day, and I see copper doing really well, and I see aluminium not doing so well, and you're like sitting there going, well, the supply demand situation in aluminium at the moment is actually tighter than copper, but everybody's looking at copper because it's sort of been the focus area over the last sort of 4 or 5 years. Whereas I personally think at the moment there's more value in aluminium.
And aluminum is a substitute for copper. Whenever like Rodney and we have dug into the kind of the copper story, the threat is substitutability.
I think that there's been some substitution from copper into aluminium, particularly in sort of things like air conditioning units, and certainly in terms of long distance cabling. But certain high voltage applications, it's very, very difficult to substitute. and certainly sort of things like transformers, etc. Again, it's very, very difficult to substitute for copper. So I think the copper story is intact. I'm not worried about the copper story, but there is quite a strong aluminium story, which I don't think people are really picking up on as well.
Okay, interesting. I'm looking at Alcoa. I don't know if that's still a Dow component, but it used to be. But 130-year-old company, sitting there with a whopping market cap of $8 billion. So lower than Albemarle and lower than MP for this very large industry. Anyway, so interesting. We'll be looking to see what um, maybe some bauxite developers, may come across our way in the coming weeks and months. Uh, okay, well, you mentioned, I think in past, I don't know, high purity manganese. You've also mentioned your high purity alumina and stuff that I've listened to or read in your battery materials review. Do you want to just cover those quickly?
Well, I mean, I think high purity manganese for me is one of the most exciting markets in the battery materials area at the moment. Um, it's a market where people sort of look at the surface of the market and they go, "Oh, manganese, there's shed loads of manganese in the world. There can't be a shortage of manganese." And indeed, there isn't a shortage of manganese. Manganese is a major component of the steel industry. But the problem is high purity manganese, which is a core component of a number of batteries, ternary battery materials, and also increasingly now with news that GM and Ford are going to launch LMR batteries. And increasingly now, as we start to see LMFP batteries start to take off in China, which is beyond the sort of fourth generation of LFP batteries. So there's going to be strong demand for high purity manganese going forward. But there isn't a hell of a lot of supply. And in fact, outside China, there's very, very small amount of supply of high purity manganese, particularly high purity manganese sulfate monohydrate, which is the core raw material. And maybe people don't follow it because the names are so difficult to follow, but we call it HPMSM.
That rolls
Yeah,
off the tongue.
yeah, well, better than high purity, manganese sulfate monohydrate. Yeah, so I think the issue in high purity manganese is that, there's very little, supply outside China. If Ford and GM and, other companies are serious about launching high manganese battery solutions, there just is not any processing capacity, that is, in advanced development at the moment. There's a number of projects in Australia and Europe, even in South Africa, but they're not funded at the moment, and that's a key area. So if GM and Ford are going to bring in these high manganese batteries by the end of this decade, at the moment they're going to have to source that material from China. And obviously that's going to interfere with sourcing credits, raw material sourcing credits, etc. So for me, the world needs to get its skates on and source and fund high purity manganese projects, PDQ, if we're going to be able to supply enough manganese for this quite fast emerging sort of subset of batteries.
And how are ways to express a view on this market through
Yeah, I mean, I
equities?
I think, well, there's probably 3 stocks that come to mind, 4 stocks that come to mind in terms of the, players at the moment. There's a company called Firebird Metals, which is listed on the ASX, which has a project they have an upstream project in Australia and a project in China. And then there's Gianni Metals, and Manganese. So Gianni has an upstream asset in Botswana, and then Manganese has an asset in the Czech Republic. And then there's Element 25, which has an upstream asset in Australia and potentially looking at a processing plant in the US. So those are really the four ways to play sort of high purity manganese at the moment. I know that South 32 is developing a project in the US, but obviously not a pure play, a very impure play on manganese.
Right. Okay. That's helpful. And high purity alumina has come on my radar because an old friend and legend in the lithium industry, Richard Seville, founder of Orocobre, has turned his attention to a private company called AEM, International, and I've heard that story a bit. So, and I know there's another company, A4N, that has a high market cap in Australia. So I haven't studied this market in great detail, but I remember first hearing about it in one of your writings in the Battery Materials Review in the last kind of couple of years. So, any comment on that?
Yeah, I mean, I think HPA is a really fascinating space. There's a couple of applications. There's an application, I think, in LEDs, but the more interesting application in the battery space is basically as a coating medium for separators and also for anode and cathode materials, and it basically stops um, cathode materials developing dendrites, and then which obviously pierce the battery films, and then as a coating medium in other parts of the battery. So it's a very high growth area if you can get these really thin film, high purity alumina going forward. And it's a very substantial growth area with quite high margins. So and there's only, a very, very small percentage of companies in the world that have the technology to do this. So I think HPA is potentially an interesting growth area, small market. And again, one of these minor metals with companies um, that have the potential to dominate in quite small market areas with very high growth.
Okay, great. And just to conclude, it wouldn't be a rock stock channel, kind of conversation unless we kind of covered what's happening in the lithium market. Rodney, Matt, Goldman Sachs was out with a note yesterday following last week's Reuters article about these shutdowns of a Chinese mine or inspections. We have seen what looks to be like a short covering rally. I wrote about this in the Lithium Bull. A lot of people say, I don't want to catch a falling knife. I'm happy to miss the first 20 to 30% upside before getting in. Well, a lot of stocks are already up 20 to 30%. In some cases, a lot more than that. So what is, we spoke to lithium royalty people yesterday, and they basically said, like, we've now recovered all of the Liberation Day, collapse, right? The first quarter looked good. Then the second quarter for lithium, everyone's just like, why is the prices going down? So we've recovered back to that. But, what's your view on where we are? Is this just short covering, or might we see a sustained recovery here?
Well, I think I'm sure Rodney's got his view as well. Maybe I'll just give my view first, but my view is that a lot of players in the Chinese futures market were short, and obviously once we saw that stabilization, um, people had to cover their shorts. And I think to some extent, what we are seeing is a short covering rally. But I also think that lithium was ludicrously oversold at the levels it got. I mean, 58,000 renminbi a ton. That was probably 15, 20, 25% below the levels it should have been in this market. So I think we've still got upside from here in lithium. And I wouldn't be surprised to see prices go a little bit higher. As I posted on sort of LinkedIn and Twitter, I did consult a technical analyst about this, and I consulted a technical analyst primarily because I don't really see an improvement in fundamentals. So I do think it is a technical correction rather than a fundamental correction at this moment in time. But the technical analyst was flagging levels, I think, at 77,900 and at 82,000. This is renminbi a ton, by the way. And then above that, at sort of, I think, 105,000 would be the primary resistance levels. And of course, above sort of 95,000 a ton equates to something like $1,000 a ton SC6 price. So that could be quite substantial in terms of some of the producers in the market at the moment. For me, I would still be focusing on low cost producers, because if the rally peters out, I still think low cost producers will be profitable at these sort of prices. And companies like Sigma Lithium and Lithium Argentina and SQM, which have really low cost production assets, that dominate their production, are the places where I would be pushing my money. But then also some of the developers, which also have potentially low cost assets, they look interesting as well if prices are above, you know, 70, 75,000, 80,000 renminbi a ton. So I think that, the lithium space is materially oversold, has become materially oversold in the last 6 to 12 months. And I do still think that there is quite a lot of upside in valuations for some of these companies. But I wouldn't necessarily be chasing some of the really high costs sort of developers and producers higher.
Yeah, I mean, the first, Matt, likely the first beneficiaries of an improving price are going to be the existing producers, I should think, because they're going to get the immediate margin. Again, we always have this issue: is how long is the bull and bear cycle? Because we've had the bear cycle now for over 30 months. Can developers raise the money and build while we're still in an upswing? And I guess that's, the question that's been asked before: is you had a short window last time in which to raise the money to build and now ramp yourself up through this down cycle.
I don't have a question. I don't have an answer for that. I mean, if this is a 6 month recovery, 6 month bounce, then I think yes, there is enough time for some developers to raise money. But if this is a sort of 2 to 3 month bounce, I think it's going to be very tight, primarily because these equities are still coming from such oversold positions, that I think it's very few management teams are going to want to raise money, even with the stock up sort of 20 to 30%. It's still well below what they would see as a sort of cutoff level for raising money. So I think the other thing to obviously to point out is that, if we look into the last cycle when we saw the recovery, I think prices bottomed out in the third quarter of 2020. It wasn't until the second quarter of 2021 where we started to see huge, large scale equity raisings, even from the producers. So it could take a while before sort of stock prices get to that level where producers are sort of going around with the hat.
And Matt, for you, anecdotally, in your sort of feedback loops, are you still hearing of companies being approached for offtake, and there's still lots of interest?
Yeah, I mean, we're still hearing a lot of offtake. I mean, look, let's not get away from the fact that this is a huge demand growth sector. I mean, I'm pretty conservative. I've still got 15 to 20% demand growth CAGR over the next 10 to 15 years. So this is a huge demand growth sector, and I think companies are still trying to lock in offtake agreement, um, going forward with these projects. And I mean, even projects that I don't think are going to get built, having people approaching them for offtake agreements. So yeah, I mean, there's still a lot of demand for material in this space. It's not a, I mean, for me, what's happened in lithium is not a panic. It's a perfect normal down cycle. All of these industries are cyclical industries. They go down as well as up. I don't think the lithium event is over. I think we've got a pretty bog standard, commodity product here, specialty commodity product, and it will trade in cycles. And you have down cycles as well as up cycles, and I'm waiting now for the next fundamental up cycle, in lithium, and it will come. I'm convinced it will come.
That's great. I will reference again. I wrote about in the Lithium Bull. Can this MP, Department of Defense, dynamic emerge in lithium? And I asked ChatGPT, outside of rare earths, what should the Department of Defense be most paranoid about? And the first I asked the top 10, and the number one thing was lithium. So I then started, speculating in my own mind, why wouldn't Albemarle has argued that they need $20,000 hydroxide as an incentive price to build anything in the U.S. Well, 10,000, 20,000, compared to 10,000, is not that much different than 110 NDPR versus 60 NDPR, right? So if the U.S. government is willing to backstop a floor, double the price, of NDPR, why wouldn't they, um, you know, uh, maybe backstop Albemarle, who had plans to build 100,000 tons of hydroxide capacity to be fed by the Kings Mountain mine. The Kings Mountain mine, has the same history as the Mountain Pass mine had in California in terms of supplying, the U.S. military, back in the day. So brownfield. But I also speculated, might they invest in the smack over and big oil, politically, maybe connected to the Republicans, so might Standard Lithium, get a DoD investment, or might Ioneer replace their DOE loan, with a DoD investment. Who knows? And then might Canada follow? These are just all my speculations. I have no idea if this is going to happen, but Carney has said he's going to increase defense spending to like 5% of GDP, and he's going to finance it, with critical minerals development. Might he support some Canadian projects, through the Defense Department? And if so, a good place to look is where is the government already invested in lithium projects, and Investment Quebec is invested in Nemaska, through Rio Tinto. They're also invested with Sayona at Moblon, and they're also invested in the Renard diamond mine, which is potentially going to partner with Winsome. So could Carney somehow write a check for any or all of those projects? And if so, obviously it would be good for the overall, hard rock narrative in Quebec. I also did this. I was speculating after MP that Trump will, if Trump just says the word lithium, right? You're going to have a rally, just like nuclear is causing a rally in uranium stocks, and the MP is happening, gold is happening, copper is rising. Can you get some sort of a lithium catalyst from the administration? Just, they've been anti-wind and anti-solar, but the big, beautiful bill, as we discussed with Steve Levine, did actually promote batteries more, and batteries for military. So I'm still optimistic that with this rare earths deal done with MP, this was the Achilles heel in Trump's negotiations with China, that he's now going to turn his attention to, a big deal potentially with China. Will it result in welcoming Chinese investment in the battery supply chain in America? Maybe. But to your point, Matt, all those capital raises that were done in Q1, Q2 of 2021 followed the big bull market that started with Tesla Battery Day in September of 2020. So might September 25, mirror, September 2020, and we have this big bull market again. One thing I could tell you is that when lithium was on TV every day and coming out of Elon Musk's lips, 25 times over 2 quarters, in his quarterly conference call, that was a sign, to sell, right? What's on TV every day today versus what's not on TV every day today, could be, sell and buy signals. So lithium remains a contrarian bet. And with that optimistic thought, I started the year with an optimistic thought when Trump 2.0 came in. I continue to be optimistic and have, let's hope this rally is sustained and is not like a long, U-shaped recovery. Thank you, Matt. Welcome to RK Equity. And again, to all of our viewers and listeners, we've covered a lot of different things in this video. Please, if you have any specific companies now that we are diversifying that, are your favorites, or you think are worth our attention, or specific commodities, we will have a look at them. Matt is you're also going to see some more prolific, public writings, from Matt, who has spent most of his career as a sell side analyst. So he's very used to the daily grind of putting market commentary into public writing. So look forward to that. And thanks again, Matt. Look forward to, again, the next great upcycle of the next few years. This will mirror the event that started our careers in the early 20s. I believe it has to some
Fingers
degree, but
crossed.
it, it will come. Okay, thanks, guys.